Viewers, I'm sitting with Amin Noorani, ABN Corporation, and today what we're going to talk about, corporation versus individual purchases. So what the difference is exactly. Amin, how are you? Welcome on board.
I'm good, yeah.
The question which I'm going to ask you today, that question comes to me, I guess it came to me tons of times. So many times, that should we buy a property under our personal name or should we buy it under a corporation? So let's discuss it today with some examples that, which nomination has a pros and cons in it.
Zia, this question doesn't only come to you, thousands of times it comes to me as well. Client is, most of the time they are very confused whether the property should buy in the name of individual or should be in the name of the corporations. As obvious for anything, there are pros and cons, right? Yes. So, but I believe personally, my take on this one, that there are much more advantages to buy the property in the name of the corporation, especially when you have more than 2-3 properties, right? If it is you are buying only for a 1 or 2 property, yes, then it is perfectly fine. You can do it in your personal name, but it's very important that you should know the pros and cons why to buy in the name of the corporation. So Zia, first thing is that I'm not sure if the viewer is aware that the tax rate on the investment corporations is 47% compared to individual tax rates. So now it is apparently looks that, hey, why to pay 47% on the investment company? And it is so much, because if my tax rate is only 25%, any capital gain or any business income comes, that should be under a lower tax rate. Yeah. But there are advantages and there are ways to reduce this tax rate. So as you know that in Canada, there is an integration system. So for an active business, if there is an active business, the tax rate is only 15.5% and up to $500,000. And if person withdraws the dividend from that company, at that point in time, he also gets the dividend tax credit. Yes. And that dividend tax credit reduces his personal income. So the idea is basically to integrate the active company rate with the personal tax rate. Okay. So that is the idea. Now with the investment company, it is the reverse. I gave you an example of the active business company just so that viewer can understand why the 46% can be reduced to the personal tax rate. Yes. So initially, if there is any income in the corporation investment company, because this is the passive company, the income tax rate is 47% on the investment company. However, when you declare the dividend, you also have the refundable dividend tax on hand, and you get the refund of the dividend of the tax what you have paid initially. So and the purpose of that one is to match your company rate from 46% to your personal tax rate, which exactly can be 25-26%. Yes. So with that integration, that rate will be reduced. So initially looks that this is 46%. With the real estate investment in the corporations, there are many things which can be claimed, especially the CCA, that is the capital cost allowance, yeah, the mortgage interest, and there are many other expenses. Theoretically, there is nothing much left in the investment corporation. So the implication of that 46% is also much lesser than people think, that this 46% is going to be there. Then the another advantage which we can do, that with the corporation, you can have the different classes of shares within the corporations for your family members. For example, if the shares are in the name of you and your wife, it can be a voting shares, and then you can have a non-voting shares for your children and for your for your grandchildren. Yeah. So in that situation, the advantage is that you can distribute the income through the dividend, and it can have a great opportunity for the splitting of income. Also, it's a great state vehicle, because at that point in time, when you sell the property at any given point in time, and if your family members are the part of the shareholders, yeah, the capital gain will be only applicable to you, because that portion you are selling it, and if yes, so the property can be transferred to your grandchild or to your child very easily if you decide to transfer that property in the name of your children. Secondly, another opportunity is also available if you have a OpCo and the property is with the HoldCo. So what happens that the OpCo can charge the management expenses to the holdco and then take away the income from there into the opco. So that is another opportunity available. So then in that situation, if the holdco is a passive business, the tax rate is 46, 47%. In that situation, that money, excess income, can be transferred to the opco, and that opco can be an active company, and then the tax rate can be reduced to 15.5%. The one and the most important thing, which I kept it for last, is the liability. Because if there is something happens, if your tenant or anything, any outsiders, any stakeholders can sue the company, the liability is only limited to the holdco or the investment company. With the personal, if somebody sues you, your personal assets are exposed to any kind of a suit. So these are a few advantages of having the assets under the corporations against the individual corporations. So
great. I mean, thank you very much for your time. I know it's a vast discussion, topic, but we will try to cover, some of the other areas which we left in the upcoming interviews. Viewers, as you've seen, corporation versus individual name, Amin had given a really good answer to all of you. We'll go on a quick break. Stay with us.